basis points. The US dollar hit near 14-month highs against a basket of currencies. This has sent emerging market currencies into a tailspin, with the local currency dipping in and out of 14 against the dollar. It's down over 1% on yesterday's close. Gold stocks also took a beating, with the index falling by over 5%. And overall, the all-share index is trading in the red. In local data news, producer price inflation rose by 6.9% in November on a year-on-year basis. That's following a rise of 6.6% in October. Let's take a look at the indicators. Well, I'm joined by Herbrand Smit. He's from NEFG. Thanks very much for joining us, sir.
My pleasure.
Good stuff. Now, market reaction to the Fed rate increase has been pretty negative on the currencies, hasn't it?
Yeah, certainly. I think it's probably a bit of overreaction. But yeah, as you said earlier, there's now 3 rate rises priced into the system, where there was only 2 for 2017 beforehand. So a bit more bullish on interest rate hikes on that front. But yeah, it should be seen, I think, as a positive thing. They can raise rates only if it goes well and there's some inflation in the system. And for the first time in many months and years, there's actually some inflation, which tend to look like there's some demand on a global front for the first time in many years, which is not bad overall.
But in the short term, it's not very good for emerging market currencies, and it's not great for gold, for example.
Yeah, look, so the safe haven play is a bit off the table for a while, but yeah, I think it's short term. Still not expensive for it's now the gold price or the platinum price. From a currency basis, we know that we were 17 rand to the dollar last year this time after Nenegate, and yeah, we're now at 14. So I'm still bullish on the currency for 2017. We're still sitting with yields on our 10-year bond yields of 9 or more than 9 today. In comparison with the US, who's sitting at 2.5 on their 10-year treasury. So still, I think a better bet to invest on a 9% interest than you would on 2.5. So we will probably attract some foreign direct investments on the bond side on the local market.
Okay. And then I see that the People's Bank of China decided to weaken the Chinese yuan. Obviously, this is going to rattle Donald Trump's cage, because he's already labeled them a currency manipulator. Why do you think they had to do this?
Yeah, look, it's interesting that they're actually calling them the currency manipulator. If you look at what the Fed did over the last 6 years, it's probably a similar role that they've been playing. We know that their exports has been struggling, so if you weaken your currency, of course, that might help your local manufacturers, and that's what they're trying to accomplish. It's at the weakest point it has been. It was one of the things, I think, the themes to look at over the past year. And if you looked at closely, if the Yuan strengthened a little bit, you would see that resources and some of the other local emerging market shares did quite good on those days. So it is something you need to keep in mind for 2017. We don't need a blowout, but so far so good. They're keeping it intact.
There does seem to be a little bit of a conflicting narrative about China. On the one hand, people are saying China's not doing very well, and then on the other, there are reports coming out that, the economy is stabilizing and there looks to be some strength. For example, the copper price rose today. You'd expect it to weaken because of the stronger dollar, but it rose, and people believe that this is on the back of better fundamentals out of China. What's the reality?
Yeah, look, I don't know if anybody actually knows the reality. The reality is that these guys have been growing rapidly over time. It needs to slow down a bit. So if an enormous country like this grows at 6%, I think currently it grows at 6% or 5% is still a huge amount of growth in that economy left. They are going away from industrialization to more consumerism over time, and you probably need to have your bets on that front. But yeah, I think they still did the right things over time. If you look at all the other countries, Japan, Europe, US, they've been printing money, and they called it helicopter money by Ben Bernanke and those guys over time. And I don't think it was that successful. That is why I think markets are acting positively to Trump. He wants to spend some infrastructure money for the first time in many years in the US. And I think that helps resources as well. So it's not just a resource China story. I think if you look at some of these other countries and maybe they see that infrastructure spending can actually help boosting the economy, jobs, etc., that might be bode well for the future for resources.
And if we look more closely at South Africa, well, at least emerging markets more broadly, Moody's issued a report today saying that non-financial companies in Turkey and South Africa and some Asian countries are likely to be under pressure next year. So when you read a statement like that from an investor's perspective, what does that mean for you and how you should operate in the market?
Now look, we try to be contra-indicator from the Moody's perspectives and from the rating agencies. So when they downgrade companies, we start looking at the companies to say maybe we need to invest there, the bottom is in or something. So yeah, you might have a look at some of those companies. Normally they are behind the curve. If you remember a year back, they downgraded Anglo, I think in January, February, when the share price was 60 Rand a share. The share price are now 210 Rand a share, and they recently upgraded the share. So maybe it's time to sell Anglo again, and when they downgrade, somebody else buy it. So we don't look at the rating agencies that much. From a debt perspective, yes, more important from a fixed interest space. But from a company's perspective and a country's perspective, I think they're certainly behind the curve.
So clearly you were clever and bought those Anglo shares. And then I see AB InBev has sold its 26% stake of Distel, which it had to do in line with the Competition Commission's conditions for it to be able to take over SAB Miller. It sold that to the PIC. The PIC, I guess, can invest anywhere, you know, but it's using government employee pension funds to do so. Is this a good investment in your view?
Yeah, look, it depends on I think long-term wise, yes. Where the price is now, I think the Distel is probably a bit expensive, and that's why Cape Verde and Remgro didn't take up their rights to actually be first in the queue to buy these shares. And I think it was a concern, we some Remgro shareholders at the moment. It was a bit of a concern for us what the pricing would be if they actually purchase it. So many people in the market are expecting them to buy the Distel shares. And I think it's one of the few shares that's actually up today, and I think it's because they're not buying it and they're not paying a premium for the share. So I think from a PIC side, it's not a bad company. If they can get it at similar where the market is at the moment and don't pay a premium, that's fine. But from a Remgro shareholder perspective, we're certainly glad that they didn't buy it. They anyway own a lot of the shares.
Okay. All right, we're going to leave it there. We've run out of time. Thank you so much. Have a great festive season and all of that jazz. That was Herbrand Smit. He's from NEFG. He'll be back with us next year with more insights, more news for you after a break.
I don't know if I'm going to succeed, but I want you to tell us, who are these 3 people that you have opened corruption charges against at the Brooklyn police station? How senior are they?
Very.
Are these people who are serving in the political office of the executive mayor?
Yes.
Which means they are no longer working for the city now.
Well, I can tell you that one of them is actually finding themselves employed in another ministry.